Market coverage then, and let's welcome in our next guest. Sanjay Parekh, founder and CIO at Sohum Asset Managers, joins in. Sanjay, good to have you on. Actually, I'm going to open with aviation for the awful news that we've been discussing. And we were just discussing this with another guest as well. When it comes to aviation stocks listed here in India, anyway, we have only two plays. Do you see this as becoming a bit of a top? Till now, for instance, Indigo has had a phenomenal run, phenomenal wealth creation. But given the events of the last 24 hours and the chain reaction that it will set in motion in terms of plane deliveries, perhaps new checks, perhaps insurance costs, etc., do you see that having any impact in terms of how investors need to approach these stocks?
It's a very, very sad event, and our prayers and condolences is really feeling bad. So, on the question, I think more objectively, we all are get swayed by emotions, which is very painful, right? So I understand. But once, in terms of the business outlook for particularly...
Sanjay, sorry. I think we have you on a slightly odd line. It's a bit scratchy. We'll do one thing. We'll reconnect that line and then go back to Sanjay.
With Sanjay. Sanjay, you were telling us.
Yeah. So on the fundamentals, I think the correlation in the aviation is very, very high. This is a valid risk in this business, but I think these events happen. I really hope it doesn't happen very frequently. So I don't think that is a risk that we should be. There is a risk, but it happens. It's like a black swan event, But I think the checks and balances will significantly increase, for sure, going ahead, right at the procurement stage by the aviation companies and by the regulator also in terms of check and balances. That will definitely go up.
Hi, Sanjay. Good afternoon. Good to see you. When Sanjay, the lone metal stock that you've had and you've been building a position is Vedanta. The special situation will play out. And, with Hindustan Zinc at around 510 rupees, there's a temptation for both the Government of India as well as the Vedanta Group to take some money off the table. Because even if I take Hindustan Zinc at around 20,000 crores of EBITDA in the next 2 years, it's trading at 2,20,000 crores of market cap. So that's telling you the stock is trading at around 10 times. And if in case some money is taken off the table from Hindustan Zinc, it flows to Vedanta. What's your call on the stock at around 450 rupees?
Yeah, one part, as we've discussed also, the major issue of the global debt of the parent is significantly reduced. There's a clear roadmap of that $4.8 billion going to $3 billion and then eventually even further lower. That can be exactly, with the dividends and the royalty payments, they can repay the debt and interest payments. And we have seen that in the dollar cost borrowing of the global parent. And that, according to me, was the biggest overhang, which is now getting better and better every day. Now, again, once that is solved, then the valuation of HZL ownership by Vedanta and the core business, broadly, I think it's around 4.5-5 times EV/EBITDA, which is very, very reasonable. And also, Vedanta will also, the listed entity will also have its growth because of the aluminum expansion, the backward integration, and the coal mining coming up. So the entire company, in terms of the integration level in the aluminum space, will significantly get better in the next 2-3 years. And it's a sizable EBITDA of 45,000-50,000 crores. So we think that it is a good large cap holding to have it. Of course, it's a commodity, so we need to keep an eye on aluminum prices and zinc prices. But they are very, very strong on capital cost and operational cost. So that's why we have an overweight on Vedanta. And we think that this could give outsized returns in 2 to 3 years. And the dividend, at least 30-35 rupees dividend every year, is also very, very likely. So the dividend yield itself will be very good, and plus the capital appreciation.
Any other stocks that you like? We've spoken in the past of, Angel One, and I think some of the NBFCs like Shriram Finance, Canfin Homes. Any new ideas in this market?
Yeah, no, so I'll just tell you a positioning. We are on NBFC, we have big overweight. We have housing finance companies. two of them, India Shelter and Canfin. Bajaj Finance is a core holding we have. We are a little mild underweight on banks, but overall financials, we are overweight. We have increased our exposure to discretionary, while the near-term outlook for the auto segment is weak. But I think, as we move ahead, this year low growth is known. So as we next year move ahead, interest rate cuts, the pay commissions, we will see this benefit of tax. And we strongly believe that there will be revival in demand growth, but it will come with a lag. So all of it on a top-down looks better, but bottom-up you yet to see auto demand growth in the four-wheeler segment. So we have Mahindra, we have Maruti, we've added Tata Motors recently. And not only for the four-wheeler, but because of the combined piece, we think there are risks in the 1 or 2 quarters, but there is clear deep value in Tata Motors, and that's why we've added that. But otherwise, broadly, we are domestic overweight with telecom being overweight. Real estate, we have DLF. In EMS, we have Sirma. We have in consumer durable Polycab. So by and large, that has worked, and our global underweight has also worked by IT being underweight and oil and gas. It's not a global play, but domestic come global. There also we are underweight. And FMCG is a big underweight. We are zero on FMCG. So that's the way we are positioned.
Okay, all right. Good speaking with you. Thank you so much for joining in, and you have a good weekend. Look forward to catching up again soon.